You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 28th day of July, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That's our live training room. You have to be a member or a free trial member to get into the live training room. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the top of the page there's a button that says 5-day free trial. And it really is free. There's no credit card required. In fact, we actually invest our time, our money, our resources in you so that you have access for 5 consecutive trading days to everything our lifetime members have access to. This way, at the end of the 5-day trial, without you having to spend a dime, you can make a well-informed and intelligent decision whether or not trading is right for you and what we do is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for the afternoon broadcast, which begins at 12 noon Eastern. There's 2 different ways to join the afternoon broadcast live. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before the afternoon broadcast starts. All you have to do is click the link in the email, and it will automatically log you into our platform where you have access to the question box so you can ask questions and participate in the discussion live in real time. Now, unlike the morning session, which is for members and trial members only, the afternoon broadcast, the one you're watching right now, it's open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there'll be days that you're out of the office, away from the desktop, so you still want to join the broadcast live. We have a solution for that. And if you're just busy and can't join the broadcast live, but want to see it later, well, we have a solution for that too. It's called our YouTube channel. And it's really easy to remember. youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we are, not just today or this week, but over the years. Thanks to YouTube, you can scroll back 6 days, 6 weeks, 6 months, a year, 2 years, even more. Just pick some days at random. You'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. Let's open with our daily devotional and a word of prayer. Our scripture today is Psalm 95. The topic this week has been developing a habit of gratitude. So here we go, Psalm 95 from the Message translation. Come, let's shout praises to God. Raise the roof for the rock who saved us. Let's march into his presence, singing praises, lifting the rafters with our hymns. And why? Because God is the best, High King over all the gods. In one hand he holds deep caves and caverns, in the other hand he grasps the high mountains. He made the ocean, he owns it. His hands sculpted the earth. So come, let us worship. Bow before him, on your knees before God who made us. Oh yes, he's our God, and we're the people he pastures, the flock he feeds. Drop everything and listen. Listen as he speaks. Don't turn a deaf ear as in the bitter uprising, as on the day of the wilderness test, when your ancestors turned and put me to the test. For 40 years they watched me at work among them, as over and over they tried my patience, and I was provoked. Oh, was I provoked. Can't they keep their minds on God for 5 minutes? Do they simply refuse to walk down my road? Exasperated, I exploded. They'll never get where they're headed, never be able to sit down and rest. That's Psalm 95 from the Message translation. We often think about spiritual disciplines in individualistic terms. I should read my Bible. I should pray. I should give thanks. Or some neglect personal habits and only study Scripture or pray when they gather with other believers. But neither extreme is healthy. We need to prioritize seeking to know God on our own and with others. This applies to the practice of thanksgiving, and maybe especially so. As we thank God together, it not only exalts God and emboldens our own faith, but also encourages other believers. In Psalm 95, the psalmist calls us to give thanks with one another and to one another. We not only meditate on the Bible for personal growth, but we do so to admonish one another with Scripture, to sing together, and to give thanks together. Christian life is lived out in community. It's easy to be godly when reading your Bible in the privacy of your home. But how can you show patience, grace, kindness, mercy, and love apart from relationships? The Bible is full of one another commands, central to the Christian walk. And you just can't do them in isolation. We not only need one another for our own growth, accountability, and encouragement, but we need one another as the community to pray together, share burdens together, confess sin together, rehearse and apply Scripture together, and give thanks together. Both gratitude and grumbling spread because they're interpersonal practices. They're not just communal, they're communicable, like a disease. We can pass on a spirit of gratitude or grumbling, either building up or breaking down the community. We will either share life-giving gratitude that honors God or soul-sucking gripping that dishonors Him. Don't underestimate how much you can influence others through simple words and actions. By giving thanks, sharing about God's goodness, speaking God's promises, or affirming others, you can be a source of good that helps others grow. Or you can discourage others through gossiping, complaining, venting your discontentment or jealousy, tearing people down, seeing and talking about the worst in others, and grumbling when you think life or God is unfair. Ingratitude multiplied when Israel chose to gripe rather than give thanks to God. Instead of having hearts to receive God's gifts, their hearts became cold and calloused until even blessings were rejected. Like a devastating wildfire, grumbling spreads from one person to another through one disgruntled conversation at a time. Gratitude, on the other hand, does the opposite. As our words speak about God's goodness, His attributes, His work in our life, His blessings, what He's teaching us or doing in us, and where we see His hand around us, we stir up more faith and thankfulness in one another. Joy and worship reverberate from small expressions of gratitude, much like water ripples out from a small drop in a bucket. Give voice to God's goodness. Practice thanksgiving together. Invite others to do the same by asking questions like, what's one thing you're thankful to God for today? While you're at it, you can ask yourself that same question. Join me in a word of prayer. Heavenly Father, we come before you with hearts filled with thanksgiving and praise. Just as the psalmist declared in Psalm 95, you are the great King, creator of heaven and earth. We humbly bow before your presence. Today we hear your voice calling us to worship and to exalt your name with joy. We join in the chorus of creation, lifting our voices in songs of adoration and gratitude. For you are the rock of our salvation, our refuge, and our strength. Forgive us, Lord, for the times we have hardened our hearts and turned away from your ways. We ask today that you would soften our hearts, that we may receive your teachings and walk in obedience to your commandments. Help us to recognize your sovereignty and to submit to your will, knowing that your plans for us are good. In the midst of life's challenges and uncertainties, we find comfort and rest in the knowledge that you hold all things in your hands. Lord, as we go about our daily lives, may we continually seek your presence and guidance. Open our eyes to the wonders of your creation and the signs of your love that surround us. We are your people, the sheep of your pasture, and we long to hear your voice. Lead us, God, that we may follow you faithfully and find contentment in your presence. It's in Jesus' name we believe and pray. And everybody said, amen. Well, happy Friday. I hope it's a happy Friday for you, wherever you are and wherever you are. Let me give you the numbers from around the world. I'm going to start with the cash markets, or the indices as they're called. Now, if you're tuned in via the YouTube channel live, you know that or after the fact, you know the title of today's broadcast is The Psychology of Trading. Many traders think it's only about indicators and oscillators. That's a tiny portion of what being a successful trader is about. It's the battle between your ears that you have to learn to overcome. Sadly, many traders will never understand that. So we'll talk about that for a few minutes as soon as I give you these numbers. Currently, the Dow's up 222 points, and NASDAQ's up 279 points. That's 2%. S&P 500 is up 48. That's a little over 1%. And the Russell 2000 is up 25 points, 1.25%. In the commodity basket, crude oil is down 33 cents, trading 79.77 last. Gold is up $14.90, trading 19.60 last. Silver's up 13 cents, trading 24.50 last. In the Asian markets at the close, Nikkei down 131 points, Shanghai up 59, which for the Shanghai is almost 2%, and the Hang Seng up 277 points, which is almost 1.5%. In the European markets at the close, FTSE was up 1.5. The DAX was up 63. The CAC was up 11. So we had a mixed day in Asia. It was a green day for the UK. Not a big green day, but a green day. And so far, it's a rock solid green Radio Friday here in the US of A. So, let's talk for a minute about this psychology business. Trading in the markets can be thrilling and potentially a profitable endeavor, but it also demands a deep understanding of the psychology behind trading decisions. Successful traders not only analyze their charts, trends, and economic data, but also master the psychological aspects of trading. The mental and emotional discipline required to navigate the dynamic and sometimes unpredictable nature of markets can be the key to long-term success. So let's talk about some of the key points of how you can harness your mind for optimal performance. Emotions play a significant role in trading decisions. That's number one. Fear, greed, overconfidence, and impatience are common emotional pitfalls that can lead to poor choices. Fear can cause traders to exit profitable positions too early, while greed may prevent them from cutting their losses. Overconfidence can lead to excessive risk-taking, and impatience may cause traders to jump into trades prematurely. Recognizing and managing emotions is crucial to making rational and objective decisions. Number two, risk management. A fundamental aspect of trading psychology is risk management. Successful traders understand that losses are inevitable and that protecting their capital is paramount. By implementing proper risk management techniques, such as always using a hard stop loss and trading in a position size that is appropriate for your experience, traders can control potential losses and safeguard their trading accounts from being blown up. Number three, trading requires discipline and consistency. Traders need to stick to their trading plans and avoid impulsive decisions. Deviating from a well-thought-out plan based on emotions or external influences will lead to undisciplined trading and poor results. Consistency in approach and execution allows traders to evaluate their strategies objectively and make necessary adjustments based on actual performance. Journal everything as you're learning how to trade. Confirmation bias is a cognitive bias in which traders tend to seek or interpret information that confirms their pre-existing beliefs or biases. This can prevent traders from objectively assessing market data and lead to overconfidence in their views. Being aware of confirmation bias can help traders remain open to alternative perspectives and make well-informed decisions. Or as you hear me say all the time, you have to embrace all possibilities. Patience, number 5, is a virtue in life and in trading. Waiting for high probability, low risk trade setups and ideal market conditions is crucial. Impatient traders will rush into trades, leading to poor timing and suboptimal results. Practicing patience allows traders to enter the market with a clear plan and better risk-reward ratios. Number 6, trading can be mentally demanding, and dealing with losses and drawdowns can be challenging. Mental resilience is the ability to bounce back from setbacks, learn from your mistakes, and maintain confidence in one's trading abilities. Building mental resilience involves focusing on the long-term goals, maintaining a positive mindset, and not letting short-term setbacks derail your overall trading performance. And number 7, best traders are lifelong learners. Markets are constantly evolving, and staying updated with the current market news and economic data is essential. Continuous learning helps traders adapt to changing market conditions, refine their skills, and maintain a competitive edge. Again, the indicators and oscillators are about 10% of the equation. 90% of the battle is the war going on in your head. Once you tame that beast, it doesn't make trading easy, but boy, it can be simple. Bottom line, the psychology of trading is a critical aspect of successful trading. Understanding and managing your emotions, always using proper risk management, maintaining discipline, and developing mental resilience are key components to achieving consistent profitability. As traders learn to master their minds and emotions, they gain the necessary psychological foundation to navigate challenges and the opportunities presented by the financial markets. And that goes for whether you trade futures or stocks or crypto or Forex or ETFs. The Mind of a Trader, written by my dearly departed friend Mark Douglas, should be your go-to book on learning how to tame beast between your ears. It's the thing that turned everything around for me personally. After I read that book in one setting, one Saturday, I never saw the markets the same again. Once you become a passport holder, we'll make sure you get a free legal copy of The Mind of a Trader. And we have a channel for our passport holders. It's a tribute to Mark Douglas. And you'll find lots of videos and interviews and some really great stuff that will help you with getting your mind right. And that's what you have to do. Literally have to get your mind right. Okay, Logic 247. That's our 24/7 around-the-clock E-mini alert service. We're in week 260 of Logic 247. We've issued over 14,700 individual handcrafted alerts. This week, since the market opened Sunday night at 6 p.m. Eastern, we've issued a total of 38 alerts. 7 never triggered. Still waiting on 7. So we've had 24 actionable alerts, of which 2 or 8% would have been stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure, and a simple process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Over the last 260 weeks, we've averaged 20% or less of the alerts being stopped out. So, good week, sitting at 8%. Along with the logic alerts, which come out around the clock, because futures trade around the clock and we have traders around the globe, we also have our original alert service, the concierge trade alerts. They're a little bit different. They don't come out around the clock. They come out shortly after the Globex open each evening. Last night they were posted for members and trial members at 6:40 p.m. Eastern. All the same markets. The CTAs are based on historic price action. The logic alerts are based on current price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. So what do you do with this report when it's published? Well, we'll use the ES as an example. You only need to worry about whatever markets you actually trade. Go to your 30-minute chart and make note of where price is at the time the report is published. Then draw a line in the sand at the long target and a line in the sand at the short target. These will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You look left to spot any potential obstacles, previous swing highs or swing lows, and you learn how price behaves at a weekly trading zone. Weekly trading zones are published for our members and trial members Monday morning, 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. Once you learn how price behaves around a weekly trading zone, they will become one of the most important tools in your trading toolbox. And as a lifetime member, you'll have lifetime access to the zones, to the live training room, to the unlimited one-on-one mentoring, the logic alerts, the concierge trade alerts, everything. The only hard part is resisting the urge to make it more complicated than that. We've worked very hard for a lot of years to make things as simple as possible. But inevitably, someone comes along who wants to make it more complicated. Well, if I just add this one more thing or this thing and, this holy grail, that'll help me. No, it won't. It will confuse you. Trust me, we've been down that road. We've made things as simple as they can possibly be. You simply need to follow the rules. The strategy itself is pretty simple. As long as you know which way the wind is blowing, it's pretty simple. Reach your goal for the day. Now, because this broadcast is open to the public, if you want to grab a screenshot, go right ahead. And as we go through the charts, remember, all of our members had these targets last night at 6:40 p.m. Eastern. start with the daily chart. Why? Because the institutions look at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why is that? Well, their accounts are denominated in hundreds of millions, billions, and trillions of dollars. And they trade price moves. When retail traders trade, that doesn't move price. The typical retail trader has an account in the thousands or tens of thousands of dollars. Our strategy is not designed to beat the market or outsmart the institutions. Our strategy and indicators are designed to show you what the people who do move price are doing, and then all you have to do is the exact same thing, just long enough to get your goal for the day. Yesterday, we put in a new swing high, and it was a bearish engulfing candle. The high was higher than the day before. The low was lower than the day before. Price is now up testing, blue and climbing on the daily chart. On the way up, blue and climbing is your friend. But once it gets directly above price, then it becomes potential resistance, both on the daily chart and the 30-minute chart. All alerts, logic, and the CTAs are based on the 30-minute chart. The vertical line separates today, Friday, from yesterday, Thursday. Back here's Wednesday. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. Only three things happen at a zone. 70% of the time will be consolidation. 20% of the time, rejection. 10% of the time, a slice. Price slices through a zone like it's not even there. It will typically retrace to the zone it sliced through and continue in the direction of the slice. So we opened flat last night. The Friday session began last night at 6 p.m. Eastern. It was during the life of this second 30-minute candle that the targets went out. Price pulled up to the BBC, pullback holds more often than not. And down we go, right to the target. Price gets back above the BBC, consolidates at the zone again, rallies up to the next zone and consolidates again, and then hits the target. So far, the high of the session is 46.16.5. If the market should continue higher, look for resistance here as well as here. This is the highest weekly zone for the week. The step line looks like it's starting to cross blue and climbing on the 30-minute chart, as it has already done on the daily chart. When the step line crosses blue and climbing, price will typically pull back to the BBC, and again the pullback holds more often than not. Eventually price will trade through the BBC. That keeps the markets fluid and tradable. Yesterday, when price was above the BBC, great opportunity to be long. Once price got below the BBC, lots of points on the downside. And look where the market found support, at the zone. The zone is 45.56/57, and the low of this candle is 45.58. So we missed the zone by 4 ticks. Hit the short target, hit the long target. On the Dow, we opened flat, pulled up to the BBC, dropped to the zone below, found support, got back above the BBC, ran to the zone, found resistance, pulled back, consolidated. That's what's going to happen 70% of the time. And then we had a leg and a retracement. We hit the target and a retracement right back to the zone. See, on the way up, the zone is resistance. When the market pulls back, it becomes support. And so we hit the target again, trade it through it, and that just might be the high of the day right there. On the Russell, we opened sideways, reached down to the short target, got above the BBC, ran to the long target. Right here, price stopped. Whenever there's a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be good resistance. Same is true of a bullish cross. In other words, here's a bullish cross where the blue line gets above the BBC, stands for bull-bear cross. When price is below it, we're bearish. We anticipate lower prices. When price gets back above it, we're bullish and anticipate higher prices. Hence the name BBC. Bearish, bullish. If price were to start dropping right now, we would expect support at the area of the bullish cross, at least the first time down. Just like we found resistance the first time up. The step line has crossed on the Russell, and blue and climbing is directly above price. So it would be no surprise to see price drop back to this zone and to the BBC. Now, as I mentioned earlier, you have to embrace all possibilities. If price can get above this area, you've got resistance there and potential resistance there. But once you get to 2000, you've got a pretty clear run up to 2006. The Russell pays $50 a point, just like the S&P. The NQ pays $20 a point. Here's where we opened, pulled up to the BBC, the pullback held, and we just barely missed hitting the short target. And just like the other indices, once we got above the BBC, we ran to the zone, consolidated, hit the target, consolidated some more, hit the zone, consolidated. And now, we had a high yesterday here, got a lower high here. The step line is about to cross blue and climbing. Price will most likely pull back to the zone and potentially all the way back to the BBC. We expect the pullback to hold until proven otherwise. On crude, here's where we opened, ran up to the long target, pulled back, pullback held, we hit the target again, and we got below the BBC and ran to the short target, and we got back above the BBC and ran to the long target. We retraced to the BBC and hit the long target again. There's once, twice, 3 times, 4 times, and the short target 1 time. Gold opened right at a weekly zone, and what did it do? It consolidated. In fact, it consolidated at the zone yesterday afternoon. Then when the markets reopened last night at 6 p.m. Eastern, it continued to consolidate. Got above the BBC, retraced, but never really pulled away. And continued its upward move right to the target. And we pulled back to the BBC, the pullback held, and we ran to the target again. Now, if you look left, you can see areas of potential resistance. There's still a window of opportunity up here, but keep these areas in mind. Silver. Silver opened flat, pulled up to the BBC, got below the BBC, got below blue and climbing, which turned to red and falling. You only need 2 pennies in silver to get your goal for the day. And this candle opened at 24.32, and it dropped to 24.27. Then we get above the BBC. This candle opened at 24.34, and we basically ran all the way up to 24.52. Remember, all you need is 2 pennies to get your goal today. And on the euro, we opened flat, pulled up to the BBC, found resistance, sent us down to the target once, twice. We got above the BBC, ran right up to the zone, then price pulled back to the BBC, pullback held, and here we are consolidating at the zone, which is the lowest weekly zone for the euro this week. 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. That brings us around the world back to the daily chart, where price is still struggling to get above blue and climbing. We got a little bit above it, you can see that wick, but that's where the battle is right now. Institutional buyers obviously have been buying, but I suspect there's a bull trap in the works here. It's not a forecast, just an observation. Price always reverts to the mean, like it did here, and here, and here, and here. So what we have now is the BBC rising to meet price, which is not the same as price dropping to meet the BBC. Eventually, price will hit it. Now we've held about 9 times in a row, 8 times in a row on the pullback on the daily chart. Whatever market you trade, spend 2 minutes with the daily chart so that you can understand what the big picture is, what the deep pockets are doing. Remember, you're not trying to outsmart them because you never will. Your pockets aren't deep enough. But once you clearly understand what they're doing, then all you have to do is the same thing long enough to get your goal for the day. Learning to use multiple time frames is very important. Now, you don't have to stare at the daily chart all day. If you spend 2 minutes, whether you're trading a stock, futures, crypto, forex, ETFs, bonds, whatever, you make note of where the major areas of potential resistance are and potential support. On that drop yesterday, as we discussed yesterday, 24% fib extension be the most likely place for price to find support. That's exactly what it did. On the way up, it was resistance 1, 2, 3 days. Then we pulled back and we had support 1, 2, 3 days. Then 4 days. Now the 5th day. Price would lag to get up to the 38% fib extension. In order to do so, it would have to overcome yesterday's high. And that would be quite a distance to travel on a Friday. It's not impossible. Step line is crossed, so our anticipation is for a pullback to the BBC. Okay, it's time for Michael to give us a recap of the live training room. After that, we'll trade live on the TradingView platform for 30 minutes, and then I'll come back and wrap things up with our good word for the day. So we'll give Michael a moment to get logged in. getting logged in. To become a lifetime member, go here, eminifuturestrading.com. That's where you get your passport. It's lifetime access to everything we do, everything we've ever done, whatever we do in the future. There are no recurring fees, no upsells, no nonsense. You'll have lifetime access to the live training room every trading day for 2 hours. There he is.
Here I am. I am here.
All right.
Okay, let me load it up with that. Just leave that, and hang on, it should be coming up here. There you go. Should be popping up now.
All right, looks good.
All right, here we go. Ready to roll. Yes, I gotta start up the other thing too. I'm thinking about it. Here, let me start right here. Good afternoon, everyone. Happy Friday. If you have not taken a free trial with us, then just go here to mytradingiq.com and click right here where it says sign up for free 5-day training. It's 9:30 to 11:30 Eastern time. That is every single business day, 9:30 to 11:30 Eastern time. Once you sign up for the trial, you should go over here and click trading platforms and get your trading platform running in front of you. All right, you get the most out of the trial if that is running in front of you. You should also click on trade rules and check out the rules for the trade setups. What you see right here, these are the entry criteria for the TradingView rules and TradingView charts. All right, if you have Ninja or DT Pro, the entry criteria is down here. But the risk management and exit criteria are the same for all platforms. Okay. So check out the trade rules, watch these videos. You'll see some videos in there of what we do in the room so you know what to expect when you get in there. And yeah, that. All right. So spreadsheet. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. So we had a pretty good day today. Started off really slow and got kind of active toward the end. It was really slow in the middle too. But anyway, today is the 28th day of July, 2023. We made 80 ticks in the NQ, 5 ticks in the Russell. We lost 4 in gold. We made 1 on the ES. That put us at 397.5 on the morning session. Today it took 29 minutes and 9 trades to get to the goal for the day. At that point, we're up $752.50. I wrote that down over here. I did not. 29 minutes and 9 trades to get to 752.50. Okay. And that puts us on the month at $5,022. We're averaging $262 in the morning session daily on the month. On the year, we're now at $63,432. So we're averaging $443 daily in the morning session. That's with 1 contract. Okay. Now, if you were to quit trading when you get your goal for the day and to add 1 contract a month, that is why we're at 7 contracts right now, and we roll into 8 next week. We had to hit 14,000 this month. 14,000 to be able to roll to 8 next month. So next month we'll have to hit 16,000, and that's just quitting when I get the goal for the day, right? Quitting when I get the goal for the day. And this week and this month, you see, this month it was a lot closer to the 14,000 than normally. Like last month I had to hit 12,000. We're over by 5,000. This month so far we're only over 3,000. So, you know, it is what it is. We didn't have well, it's not going to be over by too much every month. You know, we shouldn't have many months where it's going to be over a whole bunch, because this is when you quit, when you get your goal for the day. So, you know, some days we're going to have big overages when we get the goal for the day, but most of the time they're going to be pretty close to the 700. Well, and next month it'll be 800 though. Anyway, so if you quit when you get your goal for the day, you only had to work 44 hours so far this year. And if you added 1 contract per month, did everything just like me, you're at $1,812 an hour so far this year. Okay. All right. Let's get into the trades. On the gold, we just had a few trades. I didn't save it when I moved it at the end of it. So I don't have all the marks in here. But on gold, our first trade in here on gold, we stopped out. We had minus minus 10 ticks on that. The next one we did was right over here when we picked up 6 ticks. So we're at minus 4 on the session for gold. It had a lot of flat movement in here, and it was looking like 2002.0 is what I was saying in here, but 2002.6 is what I thought it was going to get up to, and it never got all the way up there. That's what I was thinking this morning, right? And we did roll the gold to the Z contract. We're in the Z contract on gold now. Okay. Let me bring up the question box in case anybody asks any questions. I don't see any yet. Okay. The Russell. Now, I didn't put in the last few trades. I didn't save it, the last few trades on the Russell, so you're not going to see those either. But I'll tell you what we got. And we started out with the Russell. I'll just start out here. We started out with the Russell. Right here, we had a +5. Then we had a break even, then another break even. Then I believe we had another break even somewhere. Yeah, we had one more break even. So we had just +5 is what we ended up with the Russell. We just did not have a ton of opportunity today. During the break, let's see, the break began right here. During the break, there was one green arrow right here that didn't put in a higher swing, gave enough to get a break even. Flip to the other direction, you had a green arrow here that gave a nice trade, but it did not put in a lower swing. So you move along, had another green arrow here that did put in just a little bit higher swing, another green arrow here that put in a higher swing. So the last couple would have done pretty well for you. I mean, easily could have gotten the goal for the day if you only traded the Russell green arrows. You could have gotten the goal for the day. Okay, that is the Russell. Now the ES, we have even fewer trades. We have just these two. On this one, I got 1 tick, and on this one, I had a break even. The ES was a puzzle. I mean, it was, these lines up here were from a prior day. Let me just remove that. But the stuff it was looking at today was up here. Once we got into the trades, we were seeing these levels up here. And once the European markets closed today, we had a little bit of movement in here, but really nothing terribly tradable through all that. Okay, the markets were just really messy today. The NQ is, of course, the one we traded the most. It gave the most opportunity, and we'll go back to the beginning here on the NQ. Go back to the very beginning on the NQ. All right, so here we go. Our very first trade on the NQ was a break even right there, another break even right there. And then in here, we finally picked up, it looks like 4 ticks on the first one, then 1 tick got us to 0.5, got us to 5, and then the next one got us to 6, and then the next one we picked up 8 ticks and got us to 14, and then hang on, we went a ways in here. We had another break even right there. See all the no trade zone that we had in here. It was taking a really long time for anything to get going today. We went from 14. The next one, wherever I hear it was, we picked up 12 there to get us to 26. Then we picked up 8 somewhere to get us to. All right, we're getting into the spot where it didn't save all my arrows. Picked up 8 somewhere else to get us to 34. Then we had 20 to get us to 64, and then we had 16 to get us to 80. I think the 8 was right in here, the 20 and the 16 were right here. I'm pretty sure that's how it came out. It could have been over here. Either way, we ended up with 80 this morning on the NQ. During the break, there were, well, the break began right in here. So if you went with this green arrow right here, I did actually do that when I was filling out the spreadsheet. I did do that and I got 30, but I didn't apply it to the total. After that one, there was a break even, not a break even. Well, could it have been a break even? It looks like 65 and a quarter up to 68 and a quarter. Yeah, break even on that one. This in here would have stopped out. You could have gotten most of the stop out back on this one. I think you only need 5 points to go up to 95, 96. Yeah, you could have gotten it back right there. Just looking at the green arrows, there was an opportunity here for a nice move, an opportunity here for a good enough move to get 30 ticks, an opportunity. I wouldn't have done this. We didn't have a higher swing. The direction change, you had 1 there and 1 there and 1 there. could have done every one of those. This put in a lower swing, this put in a lower swing, and this actually also put in a lower swing. It took a long time to do it though. But the opportunity was there for all of that. Okay. And that was the NQ today. So we had, overall, we had a pretty good day. We ended up, if I go back to the spreadsheet, we ended up with 397.50 with one contract. You know, we're trading 7 contracts. So that's a pretty good day for us. It did take quite a few trades today. It took 19 trades overall. So again, that's 19 times 7 times 5. Figure that out. 19 times 35. It's not that bad. Yeah, it's not that bad when you consider everything else that's taken in. But we made 80 ticks on the NQ, 5 ticks on the Russell. We lost 4 in gold, and we made 1 on the ES. So Monday is the last day of the month. Right? Monday is the last day of the month. So we have to make $1,500 Monday for it not to be the lowest month this year. I don't think that's going to happen. I doubt that that's going to happen on Monday. You know, $1,500 with 7 contracts, maybe, but $1,500 with 1 contract, probably not. And it's okay. I mean, it's just a slow time this year. You know, every day was positive. We didn't get our goal for the day on this one day, but every day was positive. So that's good. And we're consistently profitable. And that's where you want to be. So on the month, we're at $5,022, averaging $264 per session so far this month. And on the year, we're at $63,432, averaging $443 per session on the year. Okay, Kate, I will send that off in just a minute. All right. So let me go back here. If you've not taken a free trial with us, then just go here. Not here, sorry. Not there. Go here to mytradingiq.com, and right here on the homepage, sign up for the free trial right there. Okay. It is time for us to start the live stream, so I'm going to jump into that right now. Dive into that right now. And there. All right. Let me set that up just right. And here we go. All right. There we go. All right, so now we're doing the live stream as well. If anybody has any questions, just type them in. We just got an NQ trade that just triggered right there. Let me see if we can put that on. It's kind of late to put that on. It's already gone too far into profit to put the trade on right now. But what we want to see with that is we want to see it get down below the prior swing low right here. Okay, that's what we want to see with that. Okay. Now I missed that one. It was too late to put on. But these other markets, we don't really have anything going on with the other markets either. Gold is going kind of sideways. The long-term direction, these outer bands right here, your long-term direction, that right there on the NQ is all you want. Long-term direction is bearish. Price pulls back up, tests the ribbon. This right here, this bar right before it, is a ribbon trade. If you didn't have the arrow, like let me show you this. All right, if you didn't have the arrows on here, come on, scroll down, scroll down, scroll down. Here it is. If you didn't have the arrows on there like that, then you just had the ribbon pulling up and testing. I mean, you had the price pulling up and testing the ribbon right here. All right. That by itself is a trade setup. If the black is in the red, the long-term direction is bearish, just the test of the ribbon, the bounce off the ribbon like that is a trade all by itself. All right. And what you always anticipate is that it's going to exceed the prior swing low when it moves. It's going to exceed the prior swing low. Right, so if you go here to mytradingiq.com and you look into trade rules, this was a short trade without the slingshot. Okay, a short trade without the slingshot. It's a black line in the ribbon, must be on top and in the red, and the price must touch the ribbon on the pullback. You also have to have a lower swing, and long-term trend direction is going to be bearish. Right, long-term trend is bearish, lower swing. This is a lower swing right now, so we're putting together another trade. Now, for this to be an actual trade, price has got to get up into the ribbon, or it's got to get up into the overbought. I'm going to put the arrows back on. This ended up having an arrow right here on the bar after it hit the ribbon. because it came out of the overbought right there. All right, so get ready for a trade right now on the NQ. It hasn't hit the ribbon, it hasn't gotten into the overbought, so it's not a trade yet. It's got to do one of those things. Okay, now it's done both. So 52 down to 52 down to right down there. 52 down to 40. Is it 52 is a high? Yeah, 52 is a high. So it's going down to 47.75 is what you want to sell on that on a down close. It's got to give us a down close, and then you sell 47.75. That's what you'd be looking for on that. Right? If it gives the up close, you're not going to take the trade. But if it gives a down close at 47.75, it's going to be probably a green arrow trade. Now I took the arrows off here for a second, but let me put them back on for you. There it is. Now watch. You're going to have a green arrow when I put the arrows back on. Okay, I put those back on. I say, okay, there's the green arrow. And here is the trade. All right, now after it goes 8 ticks into profit, I got to bump that stop to break even, and I took off the manual thing, so I got to do it manually now. And I think I probably should have already done it. That go down 2 points. It did go down 2 points, so I got to bump it to break even when I can right now. Right there, stop is at break even now, and I have a 30 tick target on this. Okay, I have a 30 tick target, and I originally had a 20 tick stop. Okay, I'm just gonna lock in 1 tick on that. I originally had a 20 tick stop, so I got a 20 by 30 bracket on that. Now what it should do is get down below this level here, below 38.25. So that's way down here. Just took me out with that 1 tick. But way down here is where that should go down to. Okay. So if I actually put a thing on here, enable price alert, and I hit apply on that, 38.25 is what that should go down to. I don't know if we're going to have another trade on this, but if we do, you'll let me know. Okay. So we ended up just 1 tick on that one. In the meantime, I don't see NQ bar. What's $100? All right, let me jump over here in the live stream. Anybody that's got any questions in the live stream, just type them into the live chat. If you want to see any other symbol other than these future symbols, just type that into the live chat as well. Did you just make $100 on that, Bart? Is that what you were saying? $100 a contract. Sweet. Nice trade. Yes, and I know we have to get together as well. Now this did not put in a lower swing, so I'm not interested in this. Right, this green arrow means nothing to me. It's got to put in a lower swing before it has meaning to me. What that means, for those of you guys who are watching, anybody that's watching it after the fact, the markets are always doing the same thing, right? They're going up and down like that, and up and down like that, and then they go back up. And this right here is what this needed to do. Now it didn't do it. It pulled back up. So this one right here needs to do that. Before I'm interested in taking another trade in that direction, it's going to continue that trend and then pull back up, and then I'll take another trade over here somewhere. The next leg down. All right, that's what I'm looking to do. So if I erase all drawings and I do that, let me get back in here. Okay. So this blue that you see in the background right here, I changed the no trade zone color to be this light blue. I think that jumps out a little bit more, and it doesn't impede anybody's interpretation of this color right here. You can see that's still the red. You know, there's so many people that we have to deal with, that we have people that are colorblind, so we have to do everything we can to cater to everyone as best as we can. All right, so we're just going sideways here now. I ended up with just 1 little tick on this move right here. And what we want to see this do right here is put in a lower swing. All right, it got sideways on us, and that's fine, but now we want to see it put in a lower swing. Okay. what? That lower swing is where I had that message. That message right there. Remember I said I'm going to put a little alert down there and let me know when it hit it. It just hit it and it just popped that up. Pretty neat. I'm going to undo that now. Okay. And now, let's see. We want to see the pullback up to the ribbon. We want to see the pullback up to the ribbon. That's what we're looking for here now. It's not quite there yet. We have nothing here and nothing here. The ES did put in a lower swing, a nice lower swing there on the ES. So we want to see that pull back up into the ribbon too. Okay. Lower swing, lower swing. I don't see anybody asking for anything in here right now. So if you want to see any other symbols, you gotta let me know. If you want to see some equities or anything like that. If you have any questions, just let me know. Okay. And so we wait. All right, so it's 13:09. It's 1:09. So we have 21 minutes left in this session. Don't know if you guys, all right, have any questions about any other equities or anything like that? I'm looking for it to pull back up here and hit the ribbon on the NQ now. Hold on. That is what we're looking for here. We want to hit that ribbon up there. Okay, and well, it's not quite there yet. The ES is stalled out too. Let's look at the bigger picture stuff. Okay, let's look at the bigger picture. The ES on the 30-minute ES, it's going back down to the weekly trading zone. So the ES has a long way to go on the way down. The NQ, probably the same thing, going down to the weekly trading zone. That one didn't get up to the midpoint. This one didn't get up to the midpoint. So they're both probably going to have a big sell-off here going into the end of the day. That's what it looks like. Should be some really good trading here going into the end of the day. It's only 110 right now. We just need some other opportunities here to get into this, but we're not there yet. Okay. Now, the Russell has dropped too, so all the indices right now are going down, and gold is still going sideways. That is troublesome, but it is what it is. We just have to wait. Yeah, if you're watching this on TradingView and you're not following us yet, click the follow button and you'll be notified when we do things like earlier this week. I think it was on Wednesday. We had an unexpected sorry, I'm just watching the NQ right now because I need the downloads on the NQ to give us a green arrow short. So I'm looking at the top of the NQ right here is at 42.50, so you'd be selling 38.25. Right now it's going to be 43 minus 4, 39 even. Oops, now that number's changed again, and now I don't know if we're going to end up with a trade. Yeah, you see right there. I don't know if you guys can see that right there, but the green background, That's the long-term context. It got into the black line right there. That disqualifies any short trades. So we don't have any more short trades coming up right there. Okay. All right, not a lot happening here. We're in the overbought here. We're in the overbought here. And what we need now, look, this just went into a no trade zone on the NQ. The ES and the Russell are in the overbought, and we need them to pull back. Okay. The ES and the Russell are in the overbought. That's down here. So if we get, I mean, they're both on direction changes, so I'd really have them both pull up and hit the ribbon. I don't know that they have that in it though. You know, after a direction change, I'd like it to pull back and test the ribbon and actually bounce off of some resistance if the direction change happens to be bearish. You can see here on gold, we don't have anything going on. Let's look at the gold. Let's pull that up and look at something else. Let's look in here and see what's moved a lot today. Not much. How about this one? Meta. Let's look at Meta. That's moved a lot. The trade zones are pretty good, but we don't really want Meta on a 7 range. Let's bump that to a 100 range. So every bar is $1 now in this. Okay. There, that's better. So this morning we had a buy way down here on Meta. Down here at 315. And it ran from 315, $11 up to 326. That's a pretty good move right there. What is that, 5%? Just about. Pretty good one-day move with Meta right there. And what did it do yesterday? We had several sell-offs yesterday, but the first one, it was buying in here, buying in there, and then it changed directions. And so the first sell yesterday was 320, and then it dropped down to 310. So it's $10. It's not quite 5%, but anyway, that's what it looks like on an equity. Gold's not really giving us anything, and nobody's asking to go see anything else. So I really want to see either one of these, or to take a trade on the Russell right here. I want the Russell to get up and hit the ribbon. All right, there it is. It just hit the ribbon. Okay, so now on the Russell, we'll look for a down close. The Russell now has a high right here of 93.2. So 93.2, we will subtract 8, and that'll put us right there. All right, so the low of the bar is going to be right here at 0.5. So if it closes down there at 0.5, I want to be filled. I want to be in the trade. All right, I might not get filled at 0.4, but at least I'll be in the trade. Okay. We didn't go. There it is. Okay, we got the down close. It should give us. Why is that not doing? Is this doing that same thing it did yesterday? 92.7, 92.5. Anyway, I'm just going to short it right there. Ooh, why am I not getting filled? What the heck? There. Okay. I got the fill, finally. Yesterday I had a problem with my Russell over here. For some reason it was jumping off the U. But right now we need to get the 4 ticks in profit and just hit 4, so we can hit break even on it now. And what we anticipate is that it's going to get down here to the prior swing low to 90.7. 90.7. All right. The ES gave us the black arrow right here. Now we'll get a black arrow on the Russell if we get it down close on this bar and it pulls it out of the overbought. It'll give us a black arrow on this bar. But this one, what I was saying earlier, I don't know if I was saying it to you guys earlier, but this one is a valid trade because the black is in the red. The long-term direction is bearish, the black is in the red, and there's the black arrow that I was talking about. We ended up getting a break even on it, but there's the black arrow I was talking about. Now on the ES, it did not pull back and test the ribbon. So I'm not going to take the ES trade. Okay. No sound. I gotta tell. Blind luck is still luck. I can tell that guy. Everyone else can hear us. All right. All right. So right now we are looking for this to get up above that level right there. Looking for this to get down below that level over there. I wanted to see the ES pull back up and hit the ribbon before we take a trade. And I'm going to minimize that. So you just a little bit more chart. And we'll see what happens here. The markets are really slowed down here. It's 1:18. We have about 12 minutes left. And so far the only trades, we had a small one here on the NQ and a break even here on the Russell. Yeah, we're not getting a lot of follow through today. It's been coming in spurts. The follow through has been coming in small spurts, seems like. Randy. Yeah, if you refresh your browser, Randy, you should be okay. Everybody else is able to get in there and do stuff. Rachel, I haven't seen you in a long time. All right. So we're just waiting for something to give us an opportunity here, guys. Over here on the meta, I'm going to change that to something else. I don't think gold is really doing anything right now. So let's see. Something else that has changed a lot today. Microsoft. Go for Microsoft. Okay. Microsoft had a buy right back here. Green arrow right there for the buy. About Google's changed 3%, 2.6%. You know, the 100 range might not be the one for Google because it's only 130 bucks. So if we go down to a 50 range on that one, we'll go to a 50 range on that one. See how that looks. About the same. Nothing here on the futures. The ES has to put in a lower swing and the Russell has to put in a lower swing to give us another trade. The NQ you can see is in a no trade zone. And Google is pulling back, about ready to give a bounce off the ribbon. It looks like right here. That is a 50 range, so the high of that is at 133. So the low of it should be at 132.50 right there, yeah. Okay, all right, Rachel, sounds good. Lower swing here, and lower swing here. So we might get other trades in there right now. So let's get that ready, all right? We need now on the pullbacks, what we need to see is the black line get up into the overbought on all of these. That'd be great if we got into the overbought and we hit the ribbon on the pullback. All right, that would be great if we saw all that. If all that happened. And down close here is going to pull it out of the overbought and give us a black arrow. All right. Be 35.25 down to 31 right now is what you'd be selling on that. 31 even. Now that's changed, and it hasn't hit the ribbon here yet. Okay, there, now it has. Okay, so now you're looking at 37.75 down to 33.50. 33.50. All right, and now you may not get anything. May not get anything. Nope, nothing. That pulled back too deep. All right, so we're not in the overbought here. We're not in the overbought here. It's too deep when the black line touches the green background. That is too deep. Okay. That is what too deep means. All right. So right here on the Russell, we want that to pull back up and hit the ribbon. It doesn't actually have to because it's not the direction change anymore. So we just need this to get into the overbought and turn down. Same thing here. We have to get into the overbought and turn down. The NQ is not giving us anything, and Google should bounce from right where it is. All right. If it gets an up close on this bar, that would be a long opportunity on Google. Okay. Those of you guys who are interested in that stuff. So Google's got to go up 50 cents from here. All right. If Google closes above 132.90, then you'll have an opportunity in there. Okay. And this, the Russell now, this is another one of those trades like back here on the Russell. You see where it hit the ribbon, it gave the down close. You're not going to get an arrow because it didn't come out of the overbought. All right, so it is a valid trade, and here it is. And we'll go to break even after 4 ticks, and then we're at break even again. And hopefully we'll get something out of this one and another break even because that last one really ran. Okay. It looks like we're getting another break even. But if we do, we do. It's part of the trading. Follow the rules. I did have a bunch of break-even trades this morning. At one point this morning, I had 13 trades, and out of the 13 trades, I had 7 break-even trades. There was so little follow-through at the beginning. Yeah, this will not be a break-even trade. Okay. It should go down to right here, right there, 89.7. Now that's what the DOM is telling me. The charts are saying the same thing. The charts are saying 89.7 as well. Okay. So lock in a couple. 3. I'm going to get rid of that, bring this back up to the top. And yeah, so if you're in here and you're watching this and you like what you see and you want to take a free trial, you just have to go to mytradingiq.com and sign up on the home page. I'd show you, but I'm busy trailing my stop right now. All right, so we're flat out of that one. Okay, I'll show you now. It is 13:26. We only have a few minutes left in here. But if you haven't taken a free trial with us and you want to, go hit mytradingiq.com, right here, sign up for it. When you do that, trade rules right here. Watch this video, TradingView setup video. Watch that video. Okay. And these are the rules for the trade setups. You can watch these videos. These are videos that are created using these charts over the past year. Just some things that have gone on in the room in the morning. All right. If you're in here right now, you're watching, you're on TradingView. Give us your TradingView username and we'll set you up right away. Right? It's easy for us to set up TradingView. Okay. Now, this should make it down here to the prior swing low. This is just going sideways a little bit, and this is not really giving us anything. Okay. And now we wait. We wait again. Just jumping in here. And Okay, Randy, it looks like you're back online. That's good. So far we've had a break even on the Russell, we've had a profitable trade on the Russell, we've had a break even on the NQ, and we've had a profitable trade on the NQ. Those are the trades we've had so far. We didn't take the CS trade because I wanted it to touch the ribbon on the pullback. Didn't quite get there, but that's what I was hoping for. The Google, if we get an up close on this bar, now the up close is going to be 132.80. If Google gets up to 132.90, I think that would be a buy right now. 132.90. Okay. I don't see anybody asking anything about any other markets. So we're going to be wrapping this up here in just a minute or two anyway. Cedric, I have to send you a link to that meeting. Does anybody have any questions about anything right now? Anyone? Anybody? Any questions? All right. On the Google, we're still looking for a bounce over there. On the NQ, we are looking for a lower swing. On the ES, we got the lower swing. We didn't get a deep enough pullback. On the Russell, we got a deep enough pullback. We anticipate it's going to put in another lower swing right here. Okay. Drop down below that level there. This one a few minutes ago, what were we waiting for? I don't remember. Okay. All right, so we did get a lower swing here on the Russell. So what we'll look for now is for that to pull back up and test the ribbon one more time. We did get a lower swing here on the ES also. So the NQ should follow, and this should all go down. What I checked a little while ago, and I was saying, the ES is trying to get down to this weekly trading zone right here at 97. The NQ is trying to get down to this weekly trading zone right here at 806, I believe. So both of those markets should keep going down. And if they're going to, the Russell will probably go with it. I didn't look at the Russell to give you what the Russell is doing. The Russell is going down to its weekly trading zone, all the way down here at 85. So the Russell's got, tick-wise, the Russell's got more room to move than anything else. But that's what it looks like it's going to try to do here the rest of the day, right? So our time is up. So I'm going to wrap this up. And if you guys have not taken a free trial with us and you want to, go here to mytradingiq.com, go to the home page right here, sign up for your free trial. All right. Sign up today. You have the indicators over the weekend and all week next week. All right. That's going to be it. With that, I guess we're going to wrap it up and we'll pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, you are ready.
Recap of the morning session.
Today it took 29 minutes, 9 trades to get to 752.50.
Good job.
Thank you.
All right, guys. One last look here at the daily chart. As we discussed, we expected resistance as blue and climbing had gotten directly above price. So we spiked it a little bit, but now we're backing off. Price will eventually revert to the mean. It always does. Good word for the day. Proverbs 11:3. The integrity of the upright guides them. Here are some values based on scripture. Number 1, God's sovereignty. You saw me before I was born. Every day of my life was recorded in your book. Every moment was laid out before a single day had passed. Psalm 139:16. You can rest in knowing that God has the last word on everything that concerns you. When all is said and done, you have an ordered destiny. When you know that, you don't have to try and manipulate people and circumstances to your advantage. You simply have to walk through the doors God opens and be at peace with the doors He closes, knowing He always has your best interest at heart. Number 2, integrity. That was the first scripture we read, Proverbs 11:3. As you walk in integrity, you will experience God's peace because you know you have done the right thing in His sight. Integrity is not only being honest or telling the truth, but also ensuring what you say is the truth. In other words, you make your word your bond. Psalm 15:4 says that one of the traits of a person who abides in God's presence and does His will is that they will keep their promises even when it hurts. Number 3, humility. Proverbs 15:33, humility precedes honor. Humility is not a sense of worthlessness, but instead an acceptance of your God-given strengths and God-allowed limitations. Your strengths should not make you arrogant, and your limitations should not make you apprehensive. For God has promised in 2 Corinthians 12:9, my grace is sufficient for you. My strength is made perfect in weakness. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.